Today we're going to dig into 5 small cap companies in Singapore. You know, last month we talked about Europe, correct? Europe, I still believe, is still inexpensive in comparison to US equities and US technology in particular. But today we are back to Singapore and I've actually 5 names for you. These 5 companies have seen very strong share price appreciation, and not only that, they still are going to deliver very good returns for the forecasted year ahead. And they might fall into what I categorize in my private channel as shining stars. So if you're keen to find out who are they, continue watching on. Hi guys, welcome back. Now without further ado, let's dive on to the first name for today, who is Yang Zhijiang. Yang Zhijiang is a Chinese shipbuilder listed in Singapore for more than 10 years already. And the main story about why its share price has climbed up so significantly, which I'll pull out for you to see over here, is actually gained more than 50%. And the main story is actually because it's been winning a lot of book orders. Now Yang Zhijiang builds ships, small ship, big container ships, whatever, but they have actually secured very big contracts. And let me pull up an article to show you. They've actually won, in particular this instance, $715 million a deal. So this has fueled its growth in terms of its book orders. And if I show this chart over here, you realize that this book order is at a multi-year high. And this will naturally translate into fantastic profits and revenue, correct? The main part about Yang Zhijiang's business you need to know is it's very cyclical. Some years are good, some years are bad. And when demand comes in, they come in fast and furious, and then they evaporate when there's overcapacity. So if you look in terms of long-term share price for Yang Zhijiang, you realize that it's gone up and down for many cycles already. But this cycle seems to be exceptionally strong. If you look at this chart over here, you realize that the forecasted growth for 2021 is a huge 40 to 50% gain from 2020. Now, subsequent 2022 is also another huge gain. So will Yang Zhijiang continue to trend up? Leave your thoughts and comments in the sections below. The second name for today is actually Samudara. Samudara is also in the ship business. They actually rent out and charter ships because they have container ships and industrial ships. So this whole shipping industry seems to be, on the uptrend. One is a shipbuilder and one is a charterer of ships. And let me show you the Samudara's chart in terms of performance. What do you realize? Since the COVID-19 crash, they've actually gained more than 300%, correct? And yet there are still analysts who call Samudara the world's cheapest container line. So why is that so? Let me pull up for you to see this chart over here. Really explains the trend in terms of its profits and revenues. What do you realize? Since 2021, it spiked up tremendously, correct? There's a surge in terms of demand. Of course, this demand goes up and down also. As of right now, it's on a strong trend upwards, which means for the foreseeable few quarters, I guess there'll be record profits for Samudara. So stay tuned on this company. The third name on today's list is actually Delphi. And before you get there, let me invite you to smash the like button. It's taken our team hours to prepare this presentation for you, and hopefully you've benefited, and share with anyone who should see this also. Now, Delphi actually dominates the Indonesian market. So if you are not too familiar with some of its brands, it's normal, unless you have shopped in Jakarta and stuff. Let me pull out for you a summary of what brands they actually own. They have actually in-house brands, which is Delphi, Van Hooydonk, Silver Queen, Top. And they have also agency brands like Pringles, Kellogg's, and also Tauke Neo. So Tauke Neo is a seaweed that I also like, so I do know them quite well. But they do distribute mainly in Indonesia, so that's where the core business of this operations is. But let me share with you the story of Delphi. Many years ago, Delphi was actually a very strong consumer brand, doing very well, doing very stably, but its share price has actually crashed over the last few years. Take a look at this long-term chart over here. What do you realize? You realize that it was once $2.50, correct? But right now, it's only about $1. Which means a loss of more than 60%. So this company Delphi is actually on a road to recovery. They've actually lost certain market leadership, and right now they're trying to recover, and it seems on the ground that they are doing much better than before. And that's why trends have looked better in terms of share price. This is the 1-year chart. You realize that it's gained from 60 cents all the way back up to $1 right now. So Delphi is a turnaround story, continue to keep track of its operations, but the main part I'd like to show is analysts have been forecasting that its revenues will look much better in the years ahead, and this is what I can show you. You realize that its growth for revenue looks to be about 10% for the next coming few years, and if they strengthen their brand leadership, this is actually a very stable company on a growth trend upwards. Number 4 on today's list is actually Q&M Dental, and I'm sure if you are walking around the malls in Singapore, you may have seen their clinics before. Now, everybody should get their dental treatments done every year, myself included. Because I smile a lot on camera, I should get my dental done every year. Q&M has actually seen its share price shoot up tremendously over the last few months. It's actually doubled in share price, and the reason I'll share with you in a while. But I'd like to give my take on dental business as a whole. I do believe that it's better to be a dentist than to be a C-suite of Q&M, because this is a hard business. Dentists make a lot of money per hour rate, but C-suite, they have to manage growing the business. It's always a labor type thing. You have to pay dentists to come on board, and they're always charging more and more, demanding more and more salary. So I think it's much better to be a dentist than to be a C-suite of Q&M. But nonetheless, this company has actually done very well. The management team has actually done very well in terms of growing the number of outlets. This is what I can show you. In terms of the chart, you realize that Singapore outlets have grown steadily, correct? And also the Malaysian outlets. Dental business is stable. Everybody does need dental. And the main part about why Q&M share price has actually shot up could be attributed to this. This is actually a news that Q&M has actually won to provide COVID-19 swab and testing services through one of its subsidiaries. This subsidiary is actually Acumen Diagnostics. And analysts forecast that Acumen Diagnostics will contribute about 38% in terms of profits to Q&M. That is why if you look at this summary table over here, you realize that Q&M's forecasted turnover is going to shoot up by about 50-60% and also growing beyond that. And Q&M actually pays very strong dividends. As you can see in the bottom part, they pay more than 5% in dividend yield. So with that, let me know your thoughts on Q&M, and we'll move on to number 5 on today's list. Number 5 on today's list is actually a business I visit almost on a daily basis because I need my coffee. I go to Kimlee. Kimlee is a company I've covered before on this channel, which I'll leave links towards the end of the video. Kimlee's business, of course, is very stable. They run coffee shops, correct? In my opinion, they are the king of coffee shops. Right now, Kimlee's share price has looked tremendously good, especially in the last few months. What do you realize? They have gained more than 40% in terms of share price, correct? So as an overview, Kimlee has vegetable rice business, they have dim sum business, and of course they sell drinks. And drinks, as we know, very addictive, very high margin. So get into a business whereby, not the smartest people are keen to enter. All the smart people are looking to go technology, build meatless patty and stuff. That's another story, but Kimlee's vegetable rice is bread and butter. Very simple to earn. If they keep inflating prices, they will keep rewarding shareholders like you, and share price will just naturally trend up. So this business is pretty pandemic proof, and the main part I'd like to share with you is this summary table by CIMB. What do you realize? You'd see that in terms of price earnings, it's still trending at close to average or if not slightly lower. In terms of price to book, it's also trending close to average or if not slightly lower, which means this business is probably still not expensive. And if you're keen to find out more on Kimlee, look for this previous tutorial I've done, which is a full breakdown of its various business segments. That tutorial will help you understand Kimlee a bit better. This is a small cap company, which means trading volume is very thin. Look very long term. That's a suggestion I have, and inviting you there to find out more about this company. If that's a sign off, take care and goodbye.